just wanted to reconnect and be sure that we're on the same page. Okay. So good evening, class. My name is Christiana Opalua. I will be taking you your audit assurance and forensic this diet. I guess we'll get to know each other more as we continue with the class. Let me know overboard with details. But maybe somebody here will just want to make this bigger. Yeah, we're good. So our professional ethics and code of conduct. One thing to understand is that auditing is a very regulated profession. Auditing is a very regulated profession. It is not a profession that you do based on personal sentiments or, in quotes, previous knowledge of that entity. There are specific rules that are laid down that guides how we behave and basically the conduct of accountants in this case. So in this class, we'll be looking at professional ethics and our code of conduct. There are about 6 of them. In the fundamental principle, we'll be addressing 5 and we'll be addressing 1 independently. And then we'll go on to break down the professional code of ethics and talk about, depending on the amount of time we'll have, we'll also get to threats, which are the things that limit the application of this code of ethics. And then we'll talk about safeguards. So we're not a profession that will just tell you a problem and not give a direct solution. So as an accountant, you have an outlined code of ethics that you are supposed to work with that outlines how you work. So there are now other things that are called threats. Threats are circumstances and situations that disrupt an accountant from being able to apply his professional ethics or work with his professional ethics. Then safeguards are now, okay, when these threats have played, when there are situations that indicate a threat, what should an accountant do in this case? So the way it works is, this material is very sufficient. At least I've worked with FPT 2 years now, and students have passed time and time again just with this material. So if you're looking for a way to vet, I'm trying to tell you that this is a material that is good to go. Okay? So I'll just be reading and then we'll take past questions. Now, professional ethics and code of conduct. We have 2 basic ethical codes. The first one is called the rule-based ethical code, and the second one is called the principle-based ethical code. Now, what is the rule-based? The rule-based code of ethics for accountants is a code that specifies rules that governs how an accountant behaves. And under no circumstances are they allowed to behave in contrary. The moment they behave in contrary, they've not followed the rule. What we now see is that there are many situations where accountants are not able to follow a specific rule because, you know, when we're in university, all of us, maybe if you did accounting or any commercial related course, you see that we were in management sciences and social sciences. That's to tell you that there's a heavy part of human interaction in the work that we do. And hence, it makes circumstances complex. It makes them vary, situation upon situation. So because of that, it's impossible to plan every type of ethical problem that will arise and make a rule that, okay, when this thing arises, this is what you must do. I'm trying to check. The material is on the group. Uchena, or somebody can share it, but Mr. Desal already shared the material on the group. I like to see my participants, so let me just move you guys to the side. Hopefully it doesn't confuse me. Yeah. Just reduce this. Reduce this further. Okay, so let's continue. So I said that because of that, you can't really say this is the exact way that every situation will go. Therefore, the rule-based code of ethics could not fly, because we saw that a rule book cannot apply for different nationals, cultures, different ethical viewpoints, different ethical views across countries, across culture, right? We cannot put a certain rule down and say that this is the rule that must apply to everybody. Okay, so that is the rule-based code of ethics. There are some set of codes that have been outlined, and they must be obeyed regardless of the situation and circumstance. Now, because of the impracticability, right, of the rule-based code of ethics, we now had to bring a new code of ethics that was called the principle-based code of ethics for accountants. Now, it is a code that specifies general principles and requires the accountant to act in accordance with the principle. The accountant is required to use judgment in deciding in each particular case whether the course of action is proper or is an ethical one. This is the kind of ethics or the kind of rules that have promoted things like self-assessment, where they are saying that we're not going to tell you hook, line, sinker, that as an accountant, when there is fraud, this is what you do, you must screen, They are just going to say that these are going to be outlined principles, right? As we are going to see moving forward, the acronym is COPY. So they're going to say that, okay, we're not going to say that an accountant, number one, if your client says that you should do this, don't agree, don't like, so go and report your client. No, we're just going to choose to uphold the principles that we want to see in every accountant. And those principles will help the accountant, when faced with ethical dilemmas, to make a decision. Okay? So because the rule-based code of ethics could not be practicable, it now led to the emergence of the principle-based code of ethics. So it's a set of outlined rules, and they also call it the comply or explain approach. Okay, you can just note that somewhere. The principle-based is called what? The comply or explain approach. So they are saying there will be some outlined rules. Is either you comply with those outlined rules, or you explain why that rule could not be followed. Let me give you an example. You know how from our KAMA, a company must hold their annual general meeting in 12-month interval, right? 12-month interval from the previous one, they must hold a compulsory annual general meeting, especially if they are a publicly listed company. Everybody together? You can still hear me, right?
Yes.
Yes.
However, we have seen some cases where it becomes impracticable for the company to hold an annual general meeting. They will tell you that if the company is under investigation by the CAC, they can extend their holding of an annual general meeting by 3 months. That means the interval between the annual general meeting and the next one will become 15 months for that year. Rule-based will say, under no circumstance must you not hold your AGM 12-month interval. We don't want to hear anything. Not knowing that there are different circumstances that could lead to that. Okay? And also, in the first year of the company, where they have already held an interim general meeting, 6 months, the next annual general meeting will be 12 months from that interim meeting date. So that means that it will be like 18 months. So that means that it will be like 18 months after the company's incorporation. So you can see just two instances already that will stop the practicability of a particular rule. So principles like the principle-based ethics came to solve issues like that. And when we even get to ethics in itself, you start to see why this code was very, very necessary. So it is called the comply or explain approach. That's why we see the emergence of things like notes to the accounts, where you are able to explain to the stakeholder now the specific details of a transaction, especially when there's a need to flag it. Okay, or draw the attention of the reader of that financial statement or the user of that financial statement to it. You can now explain. Like how they will tell you that related party is wrong, but IS-24 initially had a standard for it, okay? And then there's now a disclosure requirement when this particular thing, this particular transaction arises. So rule-based will just say no related party transaction. We don't want to see it at all. We don't want it to happen. But that will be us shutting down. So just to encourage people to also follow the law, and to encourage compliance. Yes, that's the right word. To encourage compliance. That's how we see the principle-based code of ethics. So it is called the what? Comply or explain rule. Now, there are 5 fundamental principles in the code. It is called the code. Both the IFAC and ICAN code of ethics are the principle-based code of ethics. Now, somebody maybe this is your first ICAN stage. So let me just say what IFAC is. IFAC is International Federation of Accountants. International Federation of Accountants. While ICAN is the Institute of Chartered Accountants of Nigeria. Okay? So the IFAC is the one that actually that outlined these 5 fundamental principles. And what ICAN did was to adopt this principle. Okay, so IFAC is the one that did what? That outlined these 5 principles, and then ICAN did what? Adopted it. So I don't want to mess this up, but I don't want to mess the document up, but you can just note it down in your notes somewhere. The acronym for this fundamental principle is COPI. 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 So let's take them one by one. The first one we have is integrity. Members should be straightforward and honest in all professional and business relationship. Integrity implies not just honesty, but also what? Fair dealing and truthfulness. Who can tell us how integrity is not just honesty? Because somebody may be hearing this for the first time, but another person understands how there's a difference between honesty and fair dealing and truthfulness. Or do you think they are similar? Hello, class. Can you guys hear me?
Yes, ma'am, we can hear you.
Yeah, I said that somebody should explain the difference between honesty and fair dealing and truthfulness. So let me just explain, because I know that maybe all of us, majority of us are in Lagos and you have had a long day. So let me not bore you with small questions. But please, I'll ask questions at least to be sure that you people are following me. Okay? So that just moving on. The difference between so now, anybody that has like lawyer friends will know that there are sometimes that you're telling the truth, but it's not the whole truth. And there are sometimes that you are telling the truth, but you are concealing a essential element in what you are saying as the truth. Okay? So fair dealing simply means that everybody should be treated the same way. Yes, you have integrity. Let's not be like when you're auditing Dangote. In this case, the way you coin your statement, the way you coin your feedback, you don't want to come off as a difficult auditor. But when you go and audit a small and co company, you know that, okay, you have all the harsh words. If this is the standard at which you will do your work, you must treat everybody fairly. Everybody must get the same type of wording. And that's why even with audit has a standard wording. Your audit report has a standard wording, especially the report in itself, just so that it is not being drafted in a way that is favorable to one client as against another person. Then another one is truthfulness. Truthfulness is basically not concealing any parts of the conversation or of the truth. Half truths. They'll say, oh, half truth is still integrity, but it is not truthfulness. Okay? So that is integrity. It means that you should be straightforward and honest. As an auditor, if you tell somebody that it is morning, they should not have to go and look outside. Everybody should be able to attest to the fact that, oh, yes, let me look at somebody's name in the class. Oh, yes, Judith said that it is morning. I can really go outside and see that it is morning. That is what is expected of an accountant. So the second one we have is objectivity. This opposite of objectivity is subjectivity. If something is not objective, that means it is subjective. What does it mean for something to be subjective? It means that it varies. There's a variable element in that thing. That is what makes it subjective. However, as an accountant, not an accountant in this case, as an accountant generally, because I don't want to streamline to an auditor, because you see this fundamental principle. It is in AAA, it is in FR, it is in PSAF. It is basically in all your courses, even when you get to professional, the fundamental principles are still there. Even when we did ICAN induction, these are one of the papers that were being presented. So that is how serious it is. Even when you start working, if you go for like work retreat, things like that, they will still reiterate all this fundamental principle. That's how important it is. So objectivity simply means not allowing for bias. It means not allowing for bias, for conflict of interest, or undue influence of others to override your professional or your business judgments. What is bias? Bias is just allowing for variables. You are, like I said, you are treating a client better than you treat another client because of different reasons. Oh, this client can introduce me to other clients, that's why, but this one doesn't have anything to offer me, right? That is not who we are supposed to be as what? As accountants. Conflict of interest simply arises where there is a clash of interest than what your client has asked you to do on an assignment. Your client has said you should come and audit, but you're going to bring them, you're going to go and do that audit because you are hoping that they will have a merger and acquisition later and you'll be able to carry out that engagement as well. That is what you have conflicting interest. Or you are going to be a client site because you're interested in one of their staff members. That is conflict of interest. You know, when you have other benefits aside the reason why you have been engaged, that is conflicting interest, and you must either communicate it to your clients or excuse yourself from such engagements because it jeopardizes your what? Your
Yes, we can see it now.
okay.
We can see it now.
Okay, so I was talking about objectivity. So it just means that a member should not allow bias, conflict of interest, or undue influence to override their professional or business judgments. Okay, and I was explaining the bias, conflict of interest, and the meaning of undue influence. Now, the third one we have is professional competence and due care. Members have a duty to maintain their professional knowledge and skill at such a level that a client or employer receives a competent service based on current developments in practice, legislation, and techniques. Members should act diligently and in accordance with applicable technical and professional standards. Now, the right way to explain this professional competence and due care is to divide them into two. What does professional competence mean? Professional competence means having the relevant amount of skill such that you are able to provide what? Competent service. Okay? That is what being competent means. You must have the skill that is required to be able to execute a job. That is professional competence. What is now due care? Sometimes it's not that you don't know the job. It is about your delivery. So it is one thing to be competent enough to carry out a service. It's another thing to do what? To act diligently and in accordance with applicable standards and what? And professional standards in every given case. Now, if you were in foundation where you have objective question, I don't know if foundation has objective anymore, but you see an exam question where they ask them that where they ask them that does due care mean the same thing for every client? Okay, where they're asking you that does due care mean the same thing for does due care mean the same thing for every client? No, due care varies. So if somebody cannot have a headache and you will give the person paracetamol, and then the person has stomach pain, and then or this person has a different type of illness, and then you're still giving them that say paracetamol. So that's what they're trying to say, that as an accountant, you must understand that different what is required of you for every client will vary based on the need of that client, and that is what due care is. Being able to carry out such service based on the need of that what of that client. That is what we call due care. Okay, so you must be professionally competent and you must exercise what? Due care. The fourth one we have is confidentiality. Confidentiality simply means not disclosing or using any information that was gotten as a result of your business and professional relationship with your client to your personal advantage. Confidentiality means what? Respecting the. Why am I hearing myself? Hello?
Maybe you're connected on two devices. Can you check?
Nope. Okay, it has stopped. So I guess what we can do is we can mute ourselves just to confirm. Yeah. Everybody can mute themselves except the speaker for now. Thank you. Okay. So I said confidentiality means respecting the information that is acquired based off your professional and business relationship with your client. See, if there's anything in this our job, there are so many informations that you will hear that, like, the reason why you are hearing that information firsthand is based off of your professional relationship with that client. Let me give you context. One of my friend, her dad like actively worked in the banking sector. So you see that time of the whole merger, not is it merger now or Access Bank acquiring Diamond Bank and everything. He was really looped in. He even knew like 6 months into the whole news announcement and everything, and she has an account with Diamond Bank. And then when everything happened, it wasn't like, oh, he has always known and all of that. And she was like, that you'd have told me now so that I go and remove my money from the bank, from Diamond Bank. And then he was like, okay, I would have told you. You would have told your friends would have. You see all those WhatsApp messages that you see as secular. It's one person's, it's obviously one person's informal conversation that becomes all those things, right? That you start to see circulars and everything, and then you're trying to verify the source. That's because somebody that has a professional duty of confidentiality has not kept to that, and that's why we are saying information that should not be in the public eye. Okay, so confidentiality simply means that because of the nature of your work, you are going to have access to a number of confidential information based off of your professional engagements with your client. You're going to have access to some level of information, and it is not in your place to use that information either for your advantage, either to your advantage, for your advantage, or for your personal gain. Okay. So the fifth one is now what? Professional behavior. Members should comply with relevant laws and regulation and avoid any action that discredits the profession. Avoid any action that does what? Discredit. You say that your behavior should not put the accounting practice into disrepute. They should behave with courtesy and consideration towards all with whom they come in contact with in professional capacity. You don't want to be an accountant that people know that is rude. You don't have respect for individuals. You don't want to be an accountant that this one is an extreme, because when we were doing ICAN class that time, they tell us that as an accountant, why would you be dragging change with conductor, all of that? But they've clarified it here that says when you are acting in professional capacity, right? You don't want to go to your client site, you're not fighting with your clients, you people are throwing blow. That is you obviously putting what the um institute at a disrepute. Now, I spent a lot of time in this fundamental principle because if you get it now, that means you have gotten it throughout your ICANN journey. Like I said, it cuts across different courses. It's an FR question, is a CSA, there's no CSME anymore. So it can be a financial management. You can see it pop up there. Um, you can see it obviously even in your SBR, PSAF. These questions are there. So if you get this fundamental principle, acronym is called COPI, COPI. You have gotten it. So I don't know if we have any other question before we move on. Any question on this fundamental principle? Any question? I have I had
Move on, ma'am.
17 people in this class. I should not be okay.
I say you should move on, ma.
Okay, I
Since
should
that.
move on. Okay, I can see that I have my professional colleagues here already. So let's move on. So these are codes that are being laid down by each professional body. What are our code of ethics? Your code of ethics are codes that have been laid down by each professional body to govern the conduct of its members. In Nigeria, the code of ethics in the profession is spelled out by the Institute of Chartered Accountants in a document called what? The Code of Conduct for Members. Like I said, it was the International Federation of Accountants that adopted this fundamental principle, and then ICAN now did what? Adopted it, right? In the document called what? The Code of Conduct for Members. So the code of conduct for members now addresses objectivity, integrity, confidentiality, conflict of interest, and independence. So the only two that I may not have explained is independence, and I explained conflict of interest briefly. Okay. So we'll talk about independence in detail as we move on further. So just to read what we have here, in addition to the additional pronouncements by ICAN, members of the institute are expected to abide with the pronouncements by the International Audit and Assurance Body. IAASB is a subcommittee of the International Federation of Accountants, which is IFAC, of which the International Chartered Accountants of Nigeria is a member. So ICAN is a member of a subcommittee in IFAC, who just people that are part of the assurance board that basically bring out all these standards that we use. So while the provisions of ICAN and IFAC are considered to be quite good and stringent enough, an accountant practicing in Nigeria should be aware of the pronouncements by the Consultative Committee of Accountants Body, that's the CCAB in the UK, as their pronouncements usually represent good current and good practice in the profession. So it's just a thing of, if it happens that your ICAN and your IFAC code are clashing with the CCAB codes, that's the Consultative Committee of Accounting Bodies, you want to apply the CCAB code over the ICAN and IFAC code because it has a wider scope. Okay, so but nobody will come and ask you this in the exam hall, but it's just good for you to know that these rules that we follow, they don't just fall. These are actually, most of them stem from international practice that we're trying to adopt here in Nigeria. So now, what is independence? Independence is divided into two. We have independence of mind and we have independence of appearance. Just to confirm, is this call record? Wow. The call is not being recorded. Please let me prompt management to record for me.
Ah,
Is it just,
wow.
you didn't notice?
You didn't notice, so
I think it's
Um,
recorded because I'm seeing it pop
When
up.
when we're logging in first, it said it was recording, but I don't know if
It's still recording. It's
It
still
is,
recording.
recording.
it's still
It's
recording.
recording.
Yeah.
So
Okay. Thank you. Just wanted to confirm. So independence is divided into two. We have independence of mind and we have independence of appearance. Independence of mind is actually the independence that's the actual independence that you need to be able to deploy your work as an accountant. It simply means that as an accountant or as a person in public practice, you must bring yourself up to a state of mind that allows you to be able to give your opinion without it being affected by influences, right? Without it being affected by influences that will compromise your personal judgment. This allows you to be able to act with integrity, to exercise objectivity, and express professional judgment in every case. So independence of mind is basically you have conducted yourself in a way that you have disassociated yourself with anything that would affect or influence your opinion when it comes to making professional judgments. Okay, so we're going to look at ICAN rules on independence, the things that affect independence, the thing that can threaten independence. And this is is a very, like I said, that some people even put it as part of the fundamental principles. Some people say there are 6 fundamental principles because it is very important in being able to deploy your work as an accountant. So it is just making sure that you are in a state of mind that your opinion are not being influenced by external forces. Okay. Now, the second one is independence in appearance, or they'll say independence of appearance. Independence, this one is funny. It just means that you have not conducted yourself in a way that an informed and reasonable third party will look at you and say, with the way this person is behaving, I'm not really sure this person is going to be able to judge this matter well and fairly. That's what independence of appearance means. Let's read what we have here. The avoidance of fact and circumstances that are so significant that a reasonable and informed third party, having knowledge of all relevant information, including any safeguard applied, will reasonably conclude a firm or a member of the assurance team integrity, objectivity, or professional skepticism to have been compromised. Okay, so you have not conducted yourself in a way. So you're supposed to be working in professional capacity with a client, and then they are seeing you people are doing wale, you people are going everywhere together. The person is doing wedding, you are there, you are the chairman of the event, and then you want to now say in this case that you are still exercising the level of professional judgment, or you have not been, or you're saying that they don't have the ability to influence your judgment. Okay, those two things cannot go hand in hand. So it is in terms of appearance is basically in your conduct, even in your looks, but it's basically just acting in a way that an informed third party will look at you and feel like, oh, I cannot trust this person's judgment. So those are the two types of independence that we have. We have independence of mind and what? Independence of appearance. Now, what are ICAN's rules on independence? I want somebody to read for us. ICAN rules on. So there are 9 of them. We'll take them in 2. So the first person will read A to D, and the second person will read E to I. Let's shoot.
Okay. ICAN rules on independence. A. All members are advised to discharge their duties with integrity and objectivity. A member should not allow his name to be associated with a document, report, or financial statements that is misleading or biased. I think there's a typo there.
Oh, they get, yeah.
Then B.
So that means actually 10.
The auditor should not hold beneficial interest in the equity of client's company. C. You should not accept fees, the amount of which is dependent on the success of the assignment. And D. You should not act as an auditor where he currently acts for the client in executive capacity.
Okay, so just take E, so it'll be 5-5.
Okay, E.
Yeah.
You should not act for 2 opposing clients in the course of negotiation, settlement, or claims unless he has been duly appointed under such processes of the law as an arbitrator.
Okay, thank you very much.
You're welcome.
So, who wants to read the other half before I explain? No, who wants to? We have 19 people in this class, so okay.
He must not give or receive from a client's company a loan or financial guarantee unless the client is acting in an ordinary course of business and the terms are not unduly favorable to the auditor.
Okay.
Are you hearing me? Yeah, F. He
Yes.
must not act as an auditor for a company where he is acting as a receiver.
Okay.
G. The auditor should not derive too great proportion of his annual recurrent fee from a client or group of connected clients. 25% is regarded as being substantial. H.
Okay.
Personal relationship, either by blood or marriage, may also affect independence. And the last one, acceptance of goods and services and undue hospitality from a client may also affect independence unless the values are modest.
Okay, thank you very much. So, based on what we have read, is there anything that's unreasonable? Number one, all members they are advised to discharge their duty with integrity and objectivity. As a member, you cannot allow your name to be associated with the documents, reports, financial statement that is misleading. As you are an accountant and this your journey, you have realized that your name has value. Your name, your signature has value, and you're supposed to place that level of value on it when you are basically like asserting anything. Asserting just means that somebody tells you repost this, let me repost my business. You should get to a point where you are becoming somebody that verifies the source of a data before sharing it. You want to be sure that that business is valid and all every other necessary detail before you associate yourself with the name or associate yourself with your signature on such type of documents, reports, or financial statements. Next one, we have that you must not hold financial benefits in the company. I don't know if any of us work in the Big Four here. There's a time that you want to go for an audit and then they ask them to fill like a form, right? Of whether they have any type of relationship with that client, that can jeopardize or that stops them from being able to act in professional capacity. And you can put it there that okay, there's a related party here or something like that, and then you are excused from the engagement. So you cannot hold financial benefits. Now they'll tell you that a twist to this is that it has to be substantial. A company cannot have 100 million shares and you have 10 shares and you say, oh, you have financial benefits. Financial benefits, regardless. But they will tell you that it must have some level of substantiality, right? Before you can say that, okay, you do not want to have acts in the interest of that client. Then the third one that we said was that you should not accept fee which is based on the success of the client. This one happens in like taxation. Oh, don't worry, we'll do this for you. If FIS not catch you, you give us more money. That is not how we're supposed to work, okay? Or you say we'll do this thing. If the measure push through, you now give us extra money. That's not how we work. You charge based on what you want to receive. In this case, then we have that the auditor should not act as an auditor where he currently acts in executive capacity. Executive capacity just means you are a director or you are part of the decision makers of that entity. You are now auditing them. That means technically you are auditing your decisions. If you are auditing your decisions, would you find anything wrong with the decisions you made? No, right? So it basically erodes the essence of auditing itself. Then we have that it should not act for two opposing clients in the course of a negotiation, settlement, or claim unless he has been duly appointed under due process of the law as an arbitrator. So you know that two clients, they have two opposing clients, and you don't have a robust team enough to take on those two different matters, and then you're going ahead to represent them. It can lead to a case of conflict of interest where there's divulging of personal details or personal information that you have gotten based off of your professional relationship with one of the clients. And then just to avoid cases like that, except you have been duly appointed as an arbitrator, or in this case now having such a robust team that those two teams can do the work and not clash. Okay, because somebody will say, but Big Four, they used to do to opposing clients. It is because they have a staff strength that can efficiently take such audits, and you are very sure that those two teams, they will not jam. Okay. Then just like Omataya was you said reading, he said that you must not give or receive from the client's company a loan or financial guarantee unless he's acting in the ordinary course of business. So that means that PAMPay gives loan, Abi. PAMPay and OPay, they used to give loan, right? So if it is in their normal course of action, then yes, it's possible that okay, an auditor collect loan from PAMPay or you collect loan from OPay. But where we are seeing that it is wrong is you are seeing a manufacturing firm and you are seeing the list of their receivables, and you are seeing somebody that's supposed to be the auditor's name there. How is a manufacturing firm? Why did they give you a loan? Like how? So it is not their ordinary course of business, and that means there's already a red flag to it. Then you must now, even if it is even if it is their ordinary course of business, you must check and make sure that there is no undue favorableness, maybe to the interest rates or to the spread of the payments, right? That was given to the auditor, because that threatens what independence. Now, besides, he must not act as an auditor for a company where he acts as a receiver. Who is a receiver? A receiver is a person that helps a company in the course of liquidation, selling off their assets, liquidating their asset, and settling different stakeholders um based on their rights as outlined in the article of association. So I don't want to go into that. Maybe as we continue, there are different level of shares, your preference shares, your ordinary shares, and all of that. So you cannot act as a receiver and still be acting as an auditor. And that's because as a receiver, you are acting in the best interest of the client. You're actually on the client side. If you can help the company to gain more money, that's what you are doing. But as an auditor, you are acting on behalf of the shareholders. So those are two opposing ends, and that's why you cannot act in both positions at the same time. Then this one is very, very, very important. You must not get a large proportion of your annual recurrent fee from a client or a group of connected clients. So you are auditing one group. Let's say you are making 100 million naira, right, in a financial year, and there's one client or there's one group, you guys are doing group, you start doing group accounts now. So a group account can have subsidiaries, a group can have different subsidiaries, but that particular group is giving you 25 million or more inside your 100 million that you make in every year. What happens? What do you think will happen to that kind of, if that client tells you that, oh, they want to call you to decide, they want to be able to have a offline conversation, what will happen? Will you be able to say no? Hello?
Is it okay? Is a question.
Yes, will you be able to say no to
Hmm.
your biggest paying clients?
No.
Exactly. So based on that, 25% is regarded to be what? To be substantial. So one client should not be giving you 25% of your total income. Then we have personal relationship, either by blood or marriage, is it may affect independence. This one we don't need to explain. So people will say, no, I can do it. Yeah, is when you're an auditor, it's not battle for being the strongest. Okay. Then we have acceptance of goods and service and undue hospitality from clients may also affect the independence unless the values are modest. This conversation used to make me laugh every time. So, let me ask a random question here. Is 2 million modest? Like just say, auditor, you have been working really hard, eh? Uh-uh. Samuel, you have been working really hard. Damilola, you have been working really hard. We just sent you a token.
It's
Now
not
check your account. They sent you 2 million. Is it modest?
it's not modest to me.
Judy said it's not modest. Who has a contrary opinion? It's fine, it's a class, so you can say your mind.
Of the auditor himself. That will
Oh,
determine if 2M is
okay.
modest or not.
Okay, Chi, I didn't get the beginning of your statement. What did you say? It depends on what?
I said it depends on the income of the auditor. What he
Okay.
earns will determine if 2M is modest or not.
Mm, mm. So, Emanuela, do you want to say something? So, isn't in this our profession, on any ground, 2 million is not modest. Now, I know that there's so many like contrary opinions and everything. But and what Ogechi said is very valid. Like that's to be my position too. That what is substantial when it comes to hospitality? Some of us we're into class. We just like expensive things. Like if you are giving us bag, if it's not Chanel, if it's not Fendi, don't bother, right? So if they give you a bag and it's worth like 4 million, it's still modest because that's who you are, right? That's what Ogechi has said. Depends on the income that of that auditor in the auditor self. But that would just be us avoiding the real facts, right? There are some things that you know that is already out of the ordinary. And when I feel like everybody knows when a gift has started to become something that want to tie your neck, it's very glaring. Okay. So what they now also did was to take these principles one by one and just re-explain it. So what we'll do is to just read through it, and if you have questions, you can let me know. So objectivity. The principle of objectivity imposes an obligation on a chartered accountant to be fair, intellectually honest, and free from conflict of interest. Regardless of the service or capacity, chartered accountants should protect the integrity of their professional service and maintain objectivity in their judgments. In selecting the situations and practices to be specifically dealt with in this ethical requirement relating to objectivity, adequate consideration should be given to the following. Number one, child accountants are exposed to situations which involve the possibility of pressures being exerted on them. These pressures may impair their objectivity. Relationships should be avoided which allow prejudice, bias, influence of others to override objectivity. Child accountants have an obligation to ensure that personnel engaged on professional service adhere to the principle of objectivity. Child accountants should neither accept gifts nor offer gifts, entertainment, which might reasonably be believed to have significant or improper influence on their professional judgments or those with whom they deal. What constitutes an excessive gift or offer of entertainment varies from situation to situation, but child accountants should avoid circumstances that will bring their profession standing into disrepute. Say when they say rántí ọmọ ẹni tó jẹ́, that's actually what they are saying in ICAN. Imagine that Immanuel Kant will say there's one model that will say act like your actions will become a universal law. Imagine that the way you behave is the standard for behavior. Will you be proud that this is the way the world behaves? Okay, so that's basically just acting in a way that brings where you are coming from or the body you are associated with to a disrepute. Okay, next we have integrity. Just not to go over them again, they basically said an accountant should not be associated with reports, returns, communications where it is believed that the information is false. It contains, I don't know how many of you heard of this thing that they said there is a discrepancy in the NNPC statements, and then their head of communications or something like that just resigned, like he just stepped down or something. So more and more, right? Shall accountants should stay with reports, returns, or communications that they believe to what? To bring the profession to a disrepute, where they see that number one, the information contains a materially false and misleading statement. You can see there. There's a false and misleading statement. Number two, it contains statements or information that has been furnished recklessly. There's no, there are errors, and it is not communicating the actual position of what the report should contain. Or the third one, it omits and obscures information required to be included, where such omission obscurity would be misleading. A member's advice and work must be uncorrupted by self-interest and be duly influenced by the interest of other parties, and must not be duly influenced by the interest of other parties. Threats can arise in a number of ways. Some are general in nature, while some are related to specific circumstances of an assignment or role. Members should identify the threats and consider them in the light of the environment that they are working with. They should take into account safeguards which will assist them to withstand these threats. Okay. So I explained conflict of interest before, right? Where I said that it is just the case where the interest that the clients want you to, the interest that you have in that assignment is different from the reason why they call you. So conflict of interest between members and ICAN should not conflicts between members and clients ICAN members or firms should not accept or continue an engagement where there's conflict of interest. The test of whether a reasonable and informed third party will consider conflict of interest is likely to affect the judgment of the firm. Number one, where a member competes directly with a client, where the receipt of commission from a third party for the like you are receiving there's referral money. There's referral money for somebody maybe you get a gig and then you are having to settle somebody, or you are settling people to help you get big companies to audit. That's obviously conflict of interest, right? Because apart from the money you are charging that client, you're going to have to charge them the referral fee that you are paying to the person that is linking you to them. Okay, so things like that, where we are seeing that you are competing with your clients, or you are receiving commission for introducing a third party to a client, or you are helping a client with recruitment and you are collecting referral, you understand? So those kind of things, they lead to conflict of interest. So they moved on to moving to explain safeguards. So safeguard are basically what to do when all these things has played out. So basically disclosure is very important. It's one of the things that have helped. Like I said, with the principle based code of ethics, you see disclosure, notes to the accounts, explaining yourself, coming out more and more, then obtaining the informed consent of the clients. So competing the firms. Okay, I'm with you. Do you have a question? Okay. So let me just continue. Conflicts between competing clients. A firm can ask for two clients that are in direct competition with each other. The firm has a professional duty of confidentiality and will not disclose confidential information about one client to its competitor. Again, the test is whether a reasonable and informed third party would consider the conflict of interest as likely to affect the judgment of the firm. The approach that the audit firm should take will be a matter of judgment and should reflect the circumstances of the case. Where the acceptance or continuance of an engagement will materially prejudice the interest of the client, the appointment should not be accepted or continued. So basically, somebody is saying that, okay, what are the instances where you can audit or carry out engagement for two competing clients? Like I said, you have to keep confidentiality. So if you have a staff strength that you know that those two people, they will not meet at different points, right? So it is a matter of like personal judgment. You have to reflect on the circumstances, say, okay, should we accept this engagement or should we just let it go, right? But in this economy, audit firms too, they are looking for money, abi? So they now outline safeguards. Just consider whether it's appropriate to accept the engagement. Being very careful with such type of clients. Like I said, this is what I've been saying. Different members of staff are used for the two engagements. There must be full and frank disclosure. This is an exam question, by the way. Exam question. So when we finish the class, I'll also type out the exam questions from this chapter and when you can see them. Okay. So full and frank disclosure to the clients of the potential conflicts and steps on how they want to manage it is very important. Procedures to prevent access to information, such as physical separation, they call it Chinese walls, abi. But in this age and time, how many big four firms used to go to office physically? Max, you go to client sites, right? So this one is just obviously very important to also just do things to avoid access of information, like information sharing among those two teams. Then we have establishing clear guidelines on security and on confidentiality and the use of confidentiality agreement, regular review of the safeguards just to make sure that you are actively covering situations that will lead to sharing of data or breaching confidentiality, and then advising one of those parties to seek an independent advice, telling them that, okay, we're auditing your competitor, you can go and ask legal, can ask compliance if this is what you people really want to do. Okay. Now we have confidentiality. So confidentiality, like I just said, it just means either you are disclosing the information that you got based on a need to know need to know basis or based on your professional and business relationship with your clients to another party without specific instruction for you to disclose, or using that information to your personal or business advantage. Okay. Now child accountants are required to do what? To maintain confidentiality even in social environment. Tell you that's why child accountants don't used to like to go to party. There's a way you just be happy in a social gathering that what they did not send you, you start saying. Maybe you're in a party, they say, oh, Chief Akintola, Arinyo, you know, see the man, he came outside, he's spraying the guy. You now say, this company that they're having going concern problem. You have started it from your party table, abi? Before the thing about bad news is, and people getting it on time, it's like, yeah, it allows, it's not like that situation was not going to turn out bad eventually, but it allows it to turn out bad even faster. That's the thing. So child accountants are expected to do what? To maintain confidentiality even in social environments. Child accountants should be alert to the possibility of circumstance, like they must understand the necessity of a disclosure, especially when they have long association with a client, or they have close family relation, immediate family relation. You now see them, I know this man in 1974. We worked in this Billy Baker, blah blah blah. And then you people are now still working together now. So also they said you should maintain confidentiality of information by disclosed by a prospective client and employer, because sometimes that you will not get a gig, but you've already gotten some level of information based off of your professional relationship with that client. Child accountants should also consider the need to maintain confidentiality of information within the firm or employing organization. Child accountants should take all necessary steps to ensure that the staff under his control and persons whom advice and assistance is obtained respect the duty of confidentiality as well. Now, this one, I really, really like it. They said your duty of confidentiality, it does not end with the engagement. Don't say, I finished the engagement, now let me come and set my ring lights and start advising people. Now say, in this life, don't judge a book by its cover. Blah, blah. Nobody, it's not in your place to do that. Okay, the following are circumstances special accountants are or may be required to. Okay, so this one, they are called exemption to what? To confidentiality. Okay, exemptions to the exceptions or exemptions to the principle of confidentiality. I know nobody has asked here, but somebody is saying that, I don't understand. But what if I'm saying that my client is doing something wrong? Are you saying that I cannot voice out that this my client is
Your
doing
line is
something wrong, or
breaking. No,
okay, can you guys hear me?
your line is
Yes, I can hear you.
We can hear you.
So do you want to check?
okay.
I I think your own line is breaking, but
We
this
can't hear
you guys
you.
who cannot hear me, they just
I can hear you. I can hear you.
okay.
We can hear you.
Okay. So I changed my network, but you can let me know. What was I saying? What was I saying? Yeah. So you have what you call exemptions, or yeah, exemptions to the principle of confidentiality. This is a very important exam question. You see, time and time again. I always say that's one of the questions that I can use to ask when they want students to pass. And what are the exemptions to our confidentiality? The first one is if the disclosure is permitted by law. Like now, when anything that relates to fraud, money laundering, human trafficking, yes, any crime, right? You have a duty to disclose. So if the disclosure is permitted by law, right, you can disclose. The second one is if the disclosure is required by law, you can disclose. If it is required by law, you can disclose. Then we said if it is needed for production of documents or other provision of evidence in a legal proceeding, yes, when it turns to the fact that they are dragging your name outside, you better disclose so they'll not say you are part and parcel of crime. Also, we have if the disclosure is to appropriate public authority. Can you guys hear me? Hello?
Yes, we can hear you.
Okay. If the disclosure is to appropriate authority of infringement of the law that came to light. So they won't tell you that if EFCC comes to meet you for your client's records, should you give your client's records to EFCC or call your clients first before you give their record?
I think you should do it EFCC because they're authorized body by federal government.
Exactly, because if you don't give them, you'll be found to be somebody that is aiding aiding whatever financial crime. However, there's a twist to it. The way it works is not that you just sit in your office, you just come and arrest all of you. They're supposed to have present a letter. You understand? They're supposed to go through the legal route, present a letter. They'll let you guys know what the investigation is about. They can even outline the document that they need. Okay, so that's what is required. It's not that you just sit down and then you just come and hijack your system and say, okay, you must give us this information. Okay, then we have if there's a professional right or duty to disclose when it is not prohibited by law. Okay, you can also disclose if you needed to comply with what if you needed to comply with quality review for a member body or professional body. Like now, ICAN can take samples of your client's work and then they want to be able to vet the quality of work that you do. So that's with that, maybe you may have to disclose. To respond to an inquiry or investigation by a member body. This one too is very important to protect the professional interest of a chartered accountant in the legal proceeding. You're saying that they want to sue you people. If it is to bring out information to say that, yes, we asked about this thing, this is what they said, this is what they now said, you know, you may have to disclose an information that you will not have ordinarily disclosed. And then we have to comply with technical standards, and technical standard ethics and other requirements. So then that's why there are other cases not covered here. Other things you should consider before you disclose an information. You want to check the interest of all other parties that may be interested in that matter. You want to check if the information you want to disclose, is it known? Is it known and is it substantial to the extent that it is practicable? If the situation is not if it's an unsubstantiated fact, if it is that's not been concluded yet. Basically, they're just trying to say that you must like vet the information you want to bring out to the public and you want to check whether it is necessary. Then another thing you consider is the type of communication that is expected, even when you want to disclose to whom in particular. Sometimes you are breaching confidentiality, but it's not that you are going to put the matter on Insta blog, Abby. You're just telling the necessary party in this case. So let's say sometimes some information is just necessary for the shareholders to be aware of. Okay, that may not even get to the audit reports. Okay, so just knowing the type of information is very necessary. Okay, so we'll take on the threats and then yeah, and then we'll continue in our next class. How many of us went to the office today?
I did.
You did. Well done. Well done. Well done. Pele? So the sacrifices we make. Okay. So we have threats. Now, what are threats? Threats are circumstances and situations that breach compliance with our fundamental principle. Like I said before, these fundamental principles, they are cute. They look like, if you apply it, everybody has integrity. You don't accept the job that you cannot do, but as professional competence, when you accept the job, you do it diligently, that's due care. You have confidentiality, you an objective person and everything, like all the 5 fundamental principles now copy, you're applying them, life will be good. However, every now and then accountant has been faced with what we call threats. Now the acronym for this is SAFI. Just the acronym for this is SAFI, SSAFI. SSAFI. Yeah. No, SSAFI, yeah. So the first S is self-interest. It is a threat to the auditor's objectivity stemming from a financial or other self-interest conflict. This could arise from fear of losing a client. Example of circumstances is number one, a financial interest in a client or jointly holding financial interest in a client. Undue dependence on total fees from a client, like an undue large proportion of your income coming from them, 25% and above, which is inclusive of a repetitive one-off assignments. Having close business relationship with your clients, concern about the possibility of losing a client, potential employment from a client, having contingency fee. If this thing happen, we will not collect this money. But if it does not happen, we'll lose the money we'll collect. Then a loan to or a loan from an assurance client or directors. So this is telling us that your objectivity has obviously been threatened, right? And all this matter, apart from the work you are going to do, we can see another interest. Either it's because you have shares, that person is the one giving you a large portion of your money. You hold that client so dearly, you cannot lose the client. You are looking at collecting another type of work from that client. There's contingency money, and they say you are owing them or you are owing them or they are owing you. So you have to continue their audit for a certain amount of time. Okay. Moving on. The second one we have is self-review. Self-review just basically means making professional decision on a work that was previously conducted by you. So, for example, you are the one that prepared the financial statement, and then you are being asked to audit the financial statement that you prepared. Okay? You are the one that prepared the financial statement, and then you are being asked to do or to audit the financial statement that was prepared by you. Okay? That's obviously not going to work. So when a member of the assurance team was previously a director of the assurance client, or he was an employee, and he exerted direct influence over some subject matters that is now part of the assurance engagement. So you are the one that made the decision in the previous FY. How can we be sure that why are you auditing the decision that you were part of? So these circumstances create what we call a self-review. The discovery of significant error during the reevaluation of a work, reporting on the operations of the financial system after being involved in their design and implementation. This is a very common practice in our environment, and therefore we should take special care of it. Sometimes you're the one that even designed and implemented their financial system, and then you're going to go and audit it. That means you have like back-end knowledge. Having prepared the original data to use to generate records that are the subject matter of the engagement. This is also in the same category with 2. You designed it, you implemented it. You are now auditing what you designed and implemented. A member of the assurance team being or having recently been a director of that client. A member of the assurance team being employed by a client to exert position of direct and significant influence over a subject matter, performing a service for a client that directly affects the subject matter. So basically, you are doing work, and then you are going to eventually have to review a work that a decision that you were previously part of. It's not going to fly. Then we have advocacy threats. Advocacy threat is basically, this one is affecting the auditor's objectivity more and more. And this occurs where it gets to a point where he has to advocate for the clients. Okay? It gets to a point where he has to do what? Advocate for his clients. Like now, you saw when all these big fours, not big fours, when the CBN increased the capitalization requirements, right? of all these banks and it's there to raise shares. Did you see any of the big four companies now quoting their LinkedIn posts that they are the one that said they are doing a slice of orange? Abby, did you see KPMG now say, orange is so good, you should consider getting orange? No, that's wrong because that is them advocating for their clients. So that's just a basic example, but things like in a proceeding, in a situation, and we see that the auditor is being strongly proactive for his client. This may appear to be incompatible with the special objectivity that an audit requires. Okay. So examples of this advocacy threat is promoting shares of a quoted entity. Okay, that's the example I just gave, and acting as an advocate on behalf of the client in a litigation. Imagine an audit firm going to go and do, my lord, but my lord, my client, he cannot lie. You know, that's not going to work, Abi. Then we have familiarity or trust threats. It's called trust threat alternatively because familiarity threat stems from trust. Before familiarity can enter, it means that you are stay wole wode, abi. So a threat where the auditor, by virtue of a close relationship with the assurance clients, its directors, officers, or employees, a firm or the member of an assurance team becomes too sympathetic to the client's interest. Example is number one, you have close or immediate family relationship. Um, that's one. That you have close family relationship, one. The close family relationship you now have now has influence, two. You have relationship with the former partner of the firm and that person was like a director or an officer in a position to exert direct influence. This one they have to be adding this one. Somebody now say, oh, I know the gates man. I know the no. You must, when we're talking about familiarity, it must be somebody that is in a position of authority. Accepting gifts or preferential treatment from a client unless the value is clearly insignificant. Long association of senior personnel with the assurance client can also lead to what? Familiarity or trust threat. So you have family relationship that has direct and significant influence, a former partner, accepting gift or preferential treatment. You see, the thing about circumstances is they cut across different traits. So this is something that we'll have emphasized if we were in AAA, like the Advanced Audit and Assurance. So that one, they will give you circumstances and tell you that you should explain the different traits that it leads to. So let's say you have financial interest in a client, like you're part of the founders. So that one, we can see familiarity traits, we can see self-interest traits, we can see advocacy traits. You understand? Because you are part of them now. You are part of the owners of that company. So of course, you know you want to fight for their cause. So there are so many circumstances that cut across different traits. Like the one circumstance where we can see different traits arising. Do you guys get what I'm trying to say? Hey, this class is God that will help us. But are you guys the ones that chose 8:30 now?
No,
I
but
think
we're
it was
listening to
originally
you.
8 p.m. and
Yeah,
this like
it was originally 8 p.m. Yeah. I don't know. This 8:30. Because
as
at
in
least if we do 8 p.m., we can do 10. You understand? When
yeah,
I see 11:30, I'm like, people that are living and working in Lagos. I'm in Abuja, Sha. I'm based in Abuja. So this is very strange because all my neighbors are sleeping. Don't used to stay up late like that here. But yeah. I plan to do 10:30 because I mean you have to shut down for the night because a lot of you are still going to work and all of that. Well done, well done. So you're already here, just make it count. Okay? Just make it count. That's what I'll just say. You're already here, you're already stressing yourself. Even if you are dozing off, you cannot sleep in peace. So just make it count. Well done. Yeah, then we have intimidation. What is intimidation threats? It occurs where member of an assurance team may be deterred from acting objectively or exercising his professional skepticism, either because of threats. These threats can actually be actual threats or perceived threats. right? From directors, employees, or officers of an assurance um and of an assurance clients. Now, what are the examples of intimidation? Example of intimidation we have is you have been threatened to be dismissed or replaced in relation to a client. What? We will not next year, you won't carry out our audit again. Being threatened with litigation. I'll sue you. I'll sue you. Do you know who I am? Being pressured to reduce inappropriately the extent of work performed in order to reduce fees. Or this one, you are just signing an engagement. They're telling you that it's 2 weeks we have. When anything tẹ́ bá fẹ́ ṣe, tó bá ti di 2 weeks, báyìí kẹ́ máa lọ. Is that how I want to carry out this audit work? The firm and the member of the assurance team having a responsibility, the firm and the member of the assurance team, they have a responsibility to remain independent by taking into account the context in which they practice, the threats of independence, and the safeguards that are available. And basically looking for ways to reduce them to an acceptable level. Okay. This one is not part of this ones are not there. So this one is just a conversation. So the ones that are there is when you are threatened with dismissal, when you are threatened with litigation, and when you are being told to reduce the work that you need to do grossly. And they're saying that kill and share 2 weeks, so you get shit on. That is you being forced, okay, into basically like doing something that like they are literally like forcing or restructuring your work pattern for you. And what is the cause? It's because of see finish. Okay. So yeah, let's continue. Now, they said the work of a client firms, of an assurance firm, is just basically to look for a way where they can reduce to an acceptable level these threats. Not say that these threats will not materialize. These threats happen every now and then, right? These threats are always going to materialize, but what you are supposed to do is to reduce it to an acceptable level. Now, we said when these threats are identified, appropriate safeguards should be identified and applied to eliminate the threats or reduce them to an acceptable level. Okay? And anything you do to reduce this threat to an acceptable level should be documented in what we call a working file. So when we do audit planning, we talk about the type of files that we have. Similarly, all chartered accountant must carry out a risk assessment. It must be like a general risk assessment you must review the industry, the nature of your assignments, the management team of a client. Like when you get on an engagement, you must carry out a risk evaluation of that client to see whether that client like aligns with your goals and all of that. So we have safeguards and procedure. That's the last end. So I'm doing that because it will give you a fuller view of what we're trying to discuss. And then in our next class, we'll do ethical conflict resolution, which is basically now saying case on case scenario. How do you solve a question? Like we can check for exam questions of how like they can give you 4 different situations and say, okay, outline the threats that are involved, which of the fundamental principles have been breached, and what are the safeguards that we can apply. Okay. Now, what are safeguards? Safeguards is just like drug. You're already sick with the threats, and then you have to put in place safeguards. So safeguards are basically used to eliminate or reduce threats to an acceptable level. Most of the time, safeguard does not eliminate threats. At best, what it can do is to reduce the threat to an acceptable level. So we said safeguards are created by the profession, legislation, or regulation, or so there are 2 types of safeguard. The one by ICAN itself. So ICAN, all these acts that have been enacted into all the bills that have been enacted into laws like acts of parliament, and basically all our accounting regulations, they are the generic. That's the first type of safeguard. Then everywhere you work as a professional, they should also have safeguards to protect you. So those are the 2 broad examples of safeguards. So what are the safeguards by the profession? That's accounting in itself, ICAN, and regulations. Safeguards. So the firm or an assurance team must provide adequate safeguards to reduce to reduce threats to independence, other than those that are clearly insignificant to an acceptable level. Safeguards by the profession regulation include number one, educational training and experience requirements. Yes, I tell you that even when you have done ICAN, it's not enough. They'll tell you that you must have 36 months working experience, showing that you have actually applied what you learned. Right. So that's one of the ways that ICAN is protecting people, right? Because I've really seen that people really ride on you when they feel like you have not, you have not even seen the job. And in this age and time where we see like more younger people becoming shattered, you can see that this may be necessary. Another thing we have is professional development continuing professional development requirements. Yes. So the ICANN has a point system when you join like a area, different, what they call that thing now, districts, different district society, you join their meetings, you're participating, your points keep increasing. And then so they want to get to a point where all of us are chartered accountant, but me, I'm chartered accountant 15.0, all those step 2 level 3, abi, because I've been taking on professional developments. Okay, then all our standards, these standards are not that are basically not to stress us. That are actually protection, because you can quote that this is not the practice. Okay, so we have professional standards and monitoring and disciplinary processes. So yes, I can have a disciplinary body that sits. And I think that if I've not been teaching at all, I've been teaching since 2019, and I've seen a case of like exam malpractice. And it's a very funny, the disciplinary procedure is very, very funny, because you would have written a report from the point you are being caught. So when you go to that disciplinary, they will read the report and say, is this what happened? If you say yes, they've already made their decision. It's not a place that you come and be dragging. This is not what happened. And they are very strict. I think during Innocent's time as president, he revoked like 3 people's licenses. Yeah, there was one guy that was working in Rema Bank, was a teller or something. I went to steal money, and they were calling him. He didn't come. What did they do? I Wema, of course, he has, the Yoruba will say he's a child that has okun, abi. He's a child that has thread. So even if he's not answering them, just went to ICAN, reported him with his number, with his membership number, and then his membership was revoked. Imagine after 8:30 to 11 p.m. Yeah, and this is just July. Most likely AA is not much, so by the time we do like 14 to 15 weekends, like alternatively, me and Mr. Desalu, you most likely finish. So a good time to finish for us will be towards ending of September. We should be done because we're starting way, way, way earlier, right? But imagine all this weekend, all this commitment, and then somebody now revoke your license. Okay. External review. So we also have an external review. So we also have an external review of the quality control system. Yeah, so basically the way you have to file your account, things like that. Those are also protections. And then we have legislation governing the independence requirements. So CAMA is also a protection for accountants, just to ensure that, see, it's just good to be able to say, it's not that I'm trying to be a difficult person. This is what the code states, right? So that is a protection. That is a safeguard that can be implemented. So nobody's saying, I will do it like this for me. You're like, no, this is what the basic requirement is, and I have to do it the way the standard requires that it's done. Then corporate governance regulations. Corporate governance is basically separating ownership from control, right? Ownership are your shareholders, control are your directors. Then we have safeguard within the work environment includes, so the second one, safeguard within the work environment. So everywhere you're working, you're also supposed to actively put in place protection for the people that are working for them. So we said when the assurance clients appoint the firm, persons other than the management should ratify the appointment. That's maybe it should be vetted by the shareholders. There should be a board resolution. Non-executive director should also vet the appointment. The assurance clients must have competent employees to take on managerial roles. Okay, so even if you are an audit firm, you should have like a proper management structure going on in that your firm. Policies and procedures that emphasizes the assurance client's commitment to fair financial reporting. You should like a basic code, a basic standard that is written that this is the way we work. This is the as a firm. These are the principles. These are the ethical codes that we abide by, and it should be very clear. It should be known by everybody. Then we said internal procedures that ensures objective choices in commissioning non-assurance engagements. Just basically non-assurance agreements are the ones that are they're not necessarily audits, right? So they want you to do other form of work. You should still have, there may not be codes that are governing those ones, right? They just want you to, they call you that, help us do a risk assessment, things like that. You will still have your own internal code that says how you go about such type of engagements. Yeah, so just reading through, so those are the two. They said safeguards, other safeguards are not necessarily by the profession or by the work environment, and now the long-standing rule for professional members, of which guide the long-standing rule for professional conduct. So these are fundamental principle is a safeguard. Where appropriate, this rule imposes specific obligations where threats to the auditor's objective is so significant that no alternative safeguard will be effective. So, other things is the ethical support that we have from the institute. Like I said, there's an investigation panel, there's a disciplinary panel, so you can say that you want an investigation to be carried out on maybe even a member, even an assurance engagement firm. Yeah, you can request. And basically reinforcement of the above safeguards. So either it's a safeguard by the regulation, or safeguard by the work environment. It's just very important. Then we have active monitoring conducted by the professional committee in form of safeguards. On behalf of the institute, the professional practice monitoring committee, that is the PPMC, may visit firms which conduct audit and examine compliance with audit guidelines. So like I said, these are cases where you will not have to like disclose information, because ICAN has this professional practice monitoring committee that like goes to like vet the quality of work that is being done, surely by people that audit other firms. Okay. So we said auditors should use the above safeguard, that is profession, regulation, or safeguard from an assurance engagement, or the firms to reduce threats. Certain safeguards may increase the likelihood of identifying or deterring unethical behavior. Such safeguards includes the ones created by the accounting profession, regulation, or employing organization. But basically, how to do the safeguard is to have a proper system. Yeah, that's it. Have a proper system, and they should explicitly state in their engagements what their ethical requirements are. That this is the way we work in our organization. If you don't want to engage us, let's just be clear. Also, we said the nature of this safeguard to be applied will vary depending on the circumstances. In exercising professional judgment, chartered accountant should consider what is reasonable, and if an informed third party having this knowledge will consider you to actually be compliant. Okay. Just like what happens with the government. We have seen so many things and we're just like, there's no point. We can't really say the person is working. That's because based on your activities, an informed third party is not able to generally see that the work you are doing is what you have been put in office to do. Okay? Whew. Yeah. When I take breaks from like ICAN, when people write exam in me and you come back and you resume a diet, it's always like the first time again. But yeah, just to go over the things that we discussed in this class, we started the class with the difference between the rule-based and the principle-based code of ethics. We moved on to talk about the fundamental principles as outlined by the code of conduct for members that ICAN adopted from IFAC. which is COPI, confidentiality, objectivity, professional competence and due care, professional behavior and integrity. Then we talked about the code of ethics that were laid down by ICAN in a document called the Code of Conduct for Members. So it is your COPI plus independence and conflict of interest. So we then took it one by one. Independence has two layers. There are two types of independence: independence of mind and of appearance. Talk about the rules on independence, explain the circumstances and the situations that poses a threat to objectivity, poses a threat to integrity, situations that lead to conflict of interest, how to manage competing clients, explain the concept of confidentiality. Very importantly, explained the exemptions to the duty of confidentiality. And then we moved on to threats. Threats are just circumstances that stop the application of these fundamental principles. And the acronym is SAFI, SSAFI. Self-review, self-interest, advocacy, familiarity, and what? Intimidation threats. Okay? So you can just go through them and then we discuss the safeguards, which are the ones created by the profession, legislation or regulation, and also the one created by the firm in which you are directly working. That is the assurance firm. Okay. So what we'll do in our next class, which will most likely be upper week, because me and Mr. Adesalo are looking at the possibility of alternating the weeks, just so that we're also not burnt out, right? But you are here, you cannot alternate weeks. But yeah, we'll communicate. It's good that we're starting the class early, so at least we can even buy time. So what we'll do next week is to look at the ethical conflict resolution. This is basically is how exactly do we solve a problem start to finish. The in evaluating compliance, shadow accountant may result to solve a conflict when initiating either a formal or informal conflict resolution process. The shadow accountant may be required to do the following. So we'll see like cases where they are saying that this is what have arisen, right? You have to audit a client and you were part of that client's team, management team last financial year, right? What are the fundamental principles that have been built? What are the threats that have arisen? And what are the safeguards? So we'll look at it's like a 5-step model in solving any case. Identify the relevant facts, understand the issues involved, understand what fundamental principle it relates to, outline the internal procedures that you can use to solve it. That's basically the safeguards that you want to implement, and then look for an alternative course of action. So that's what we'll do in our next class. We'll talk about whistleblowing, nuclear, and yeah, talk about the frameworks that we have, and then we'll review past questions on the topic. Okay, so by that time you'll have had like 1 week to be able to read through the things that we have discussed in this class. Okay. Whew. So how far, my people? How was your class?
Fantastic.
Okay.
Thank
Right.
you for your time.
Okay,
Thank
so
you.
this is 10:15. Once we drop off, I would outline the past questions for this chapter. I'll drop it on the group. So that would guide your basis of reading for next week. Then when we meet upper week, we'll take some of the questions together and treat the ethical conflict resolution. Okay. So thank you very much for doing this with
Right.
me. Yeah.
Yeah,
Good
thank you.
night. Done.
Thank you very much.
Yeah, you're welcome.
Night.
Good night.